This week, Hank Thomas from Strategic Cyber Ventures is with us to discuss the state of the security market. Then Jackie McGuire from Cribble joins us to talk about curbing data chaos. Finally, in the enterprise security news, more funding for securing AI, funding for K-12 cyber education, Palo Alto Networks acquires Dig Security, Proofpoint picks up Tessian, ORNL, Oak Ridge National Labs, creates Kaiser, a center for AI security research. Cloudflare creates a tool out of spite. CISA creates a tool out of benevolence. Biden's executive order on trustworthy AI. Annual pen test stats from NetSpy. 5 lessons learned from Okta's recent breach. Should ransom payments be illegal? All that and more on this episode of Enterprise Security Weekly.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network.
Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we talk security vendors and aren't afraid to name names. It's Enterprise Security Weekly. Cyber threats target digital identities. Do you know who or what is accessing your company's apps, systems, and data? You need to know who's there, who to let in, and who to keep out. And you'll need more than access management to stay secure. You need SailPoint Identity Security. As the leader in identity security, SailPoint can help mature your security resilience while driving efficiencies and compliance for your organization. Start your identity journey with SailPoint's free maturity assessment. Go to securityweekly.com/SailPoint to get your free identity security assessment today. If you work in security or IT and your company has Okta, this message is for you. Imagine a world where only secure devices can access your cloud apps. In this world, phish credentials are useless to attackers, and you can manage every OS, even Linux, from a single dashboard. Best of all, you can get employees to fix their own device security issues without creating more work for IT. The good news is, you don't have to imagine this world. You can just start using Collide. Visit securityweekly.com/Collide to watch a demo today. That's securityweekly.com/KOLIDE. Welcome to Enterprise Security Weekly and happy National Men Make Dinner Day. This is episode 338, recorded on Thursday, November 2nd, 2023. I'm your host, Adrian Sanabria, and joining me is the Baron of Bloodhound, the Pirate King of PowerShell, the, I don't know a V word for vacations, Sean Metcalf. How are you, Sean?
Doing good, thank you.
We missed you.
I wish it was vacation. Thank you, I missed you too. It's been too long for sure. It's been my busy season in travel for conferences and going around spreading the good word of Active Directory security and Azure AD security, Entra ID security, and talking with a lot of folks across the country about different things. And apparently today is also Cook for Your Pets Day and Fried Clams Day.
Wow, so men are cooking for their pets and they're making clams is what I'm getting. If we combine all of them together.
I would not recommend feeding the pets fried clams, but who knows. And I believe tomorrow is National Godzilla Day, which I think is
wow. Cool. What would you cook for National Godzilla Day?
I don't know. Fish?
Very large steaks. I don't know. But yeah, actually, it's kind of funny that just happened to be a national day today. I mean, there's all kinds of crazy national days, but it had just been brought to my attention that there was a study that worldwide women cook twice as much as men, except for Italy. Men cook more than women in only one country, and that country is Italy.
It's a lot of pasta.
I guess that makes sense. They don't all. I think that's kind of a regional thing there. Like there's areas where they don't eat all that much pasta. But I would love to go sometime. Actually, I am going to Italy in December.
How about that? Nice segue. I've been. It's beautiful.
Yeah, we're gonna Milan, Florence area. So entirely new to me.
So that's
that
wonderful.
should be interesting.
Love it.
I grew up cooking Italian, actually, in nice Italian restaurants. So I know my way around the food, but never been to the country.
Yeah, definitely get some pesto to bring home with you. That's my recommendation.
Oh, yeah? Okay. I love pesto. Pesto's great. Yeah, and also I wanted to note that on what was the name? National Men Make Dinner Day. I'm going to make some additional rules. So the grill counts, but pouring cereal and opening Pop-Tart packages does not count as cooking. So it has to count as cooking.
I think that's fair.
All right, quick announcement here. Join us for one of our Identiverse regional events coming up on December 1st in New York City and December 5th in Chicago. Participate alongside local experts and regional peers in information-rich sessions on the latest technologies, best practices, and industry trends. Secure your complimentary registration at securityweekly.com/IDV Regional Events 2023. All right, for the first interview today, we are talking about the state of funding in the security market. We're excited to have Hank Thomas, founder of Strategic Cyber Ventures, with us today. Hank Thomas is a Washington, D.C. based venture capital investor, founder and CEO of Strategic Cyber Ventures. And SCV, which we will refer to it after this so we don't have to say Strategic Cyber Ventures. SCV invests in rapidly growing cybersecurity and privacy-focused technology companies. Welcome, Hank.
Thanks. We hope they're rapidly growing.
Yeah. Absolutely. I mean, that's a legit question in this market, right? Which is one of the things that we want to talk about here. It just kind of grew out of when I took over the podcast. I think when Paul Asadorian ran this podcast before I took it over, somewhere around episode 200 or so, there was some funding and acquisition stuff, but because I was an ex-analyst and I've always followed the market closely and been very interested in it, and we also had Tyler Shields here, and then later on added Katie Teitler as a co-host, we got very into the market. And so in the news segments, if you've ever heard one of our news segments, we typically cover all the major fundings, all the big acquisitions, and talk about market trends. So that naturally led to us having VCs on for us to chat with about the state of the market.
Excellent. Well, thanks for having me. I'm excited to talk to you.
Yeah, absolutely. Yeah. So, I didn't, our guests usually have a much longer bio posted on the show page with the show notes than anything that I read out. But one thing jumped out at me. I noticed you serve on the Consumer Electronics Show Advisory Board. How did that come about?
We had a marketing team at one point. I think they were working directly for us, and they had a relationship with the Consumer Technology Association. And I just started talking with them about, why security wasn't a bigger part of Consumer Electronics Show. And I think it just generated enough. I think I was annoying enough that they said, do you want to be on our advisory board and find panelists to come sit on panels and do security stuff in some far back corner of the room while we're showing off the new electric car? And that's what I do now. I've been doing that for, I guess, 6 years now, helping build a growing cadre of security content within the broader Consumer Electronics Show ecosystem. Had a bit of a setback during COVID, but the show's totally coming back now. It's I think this year they're going to be back to near full strength.
Yeah, I've heard it's madness. It's an enormous show, and I think gaming used to be a much bigger part of it until they kind of separated out into different shows, into E3, I think it was. Yeah,
gaming's still a part of it, but there's a lot. I mean, it's almost, I think it's the world's largest car show now. So there's just tons of that.
Wow. Really? Yeah, I guess that makes sense. With cars are more gadgets and, IoT devices than mechanical devices anymore.
That's right. I find it to be one of the better security conferences in the sense that you have, you can walk around the show and essentially look at the attack surface and then come back in and talk about security because it's all right there.
Absolutely. I mean, almost everything at CES is going to be smart, have the word smart in it, or be internet connected in some way. So I'm sure that's a IoT security playground there. And mentioning the cars, I remember I've seen it turned into a fashion for companies that don't make cars to display a car there. Like Sony, for a couple of years now, has displayed a car at CES, even though they don't seem to have any intent in making them.
Right. Yeah. I guess it's just kind of keeping people thinking, maybe it's good branding, I guess. There's, we've got flying cars there now. We've got, it's last year, I think the most exciting thing I did there.
Finally,
yes,
flying cars.
Yes. It did not take me anywhere. But I did ride in a AI, roller coaster that had real fans that like blew in my face. Virtual reality, I guess is what I'm trying to say. There's probably AI mixed in there too, but it felt like a real roller coaster. It was the best roller coaster I've been on that didn't go anywhere.
Well, I that's a bucket list item. I've got to score a ticket to CES some year.
All right. Well, let me know. I might be able to hook you up.
All right. That sounds good. It's usually in January, isn't it? Early in the year?
January. Yeah. It's the second week of January this year.
Wow. Okay. I'll be in touch.
Okay.
All right. So, So let's. I think my first question. We kind of need to level set a little bit. If somebody's coming into this discussion cold, we saw a market downturn that I think really hit mid 2021, if I recall. I think it was around June 2021 that we saw our last cybersecurity unicorn until like a week ago, right? And what was it? Who was it last week we saw that became a unicorn? I'm blanking on that.
Yeah. It'll come to me in a minute.
Oh,
It'll come to me in a minute. It escaped my head.
Yeah, I'm literally looking at the show notes from last week, and it's Island.
Right, that's Island. Right.
Yeah. So and that's when the layoffs started. Also, like maybe a couple months before the unicorns ended that year. Our show, we had a whole graph kind of overlapping the two, showing when the unicorn stopped and the layoffs started. And now, are we seeing some indications that things are coming back, that they're going back to normalcy? Because for a while, when we'd have VCs and finance folks on, or investors on, the question was, how long are things going to be like this? How long before it comes back? And obviously, it's not going to come back in a big rush. It's going to be more of a gradual thing. But are we starting to see signs that show that it is going back to normalcy? Are we seeing more investments than we were, or is there going to be? Do you think there's going to be some permanent impact of this downturn? And we're not going to go back to crazy free money where we're seeing 5-6 unicorns a month.
I think there's a lot of mixed signals right now. I think that I don't think we're going back to where we were in any time soon. Let's say the next 3 to 5 years. I think we're still on a trend of increasing consolidation. I'm seeing that. I know this for a fact. There are a lot of companies that are running out of money, and they're going to need to either reset expectations for their next round of venture funding or find a new home for the company. So I think once we get through sort of that culling of, let's say, the kind of the bottom of the barrel companies that are maybe brought on too much capital and don't have enough revenue, it's kind of as simple as that. And they find a new home, they get bolted on somewhere else. I think you're going to see probably the next wave of like over the horizon security investment begin to take place. I don't see I haven't really seen an uptick in venture investing. I think we're still doing a lot of investing ourselves. We're seeing a lot of deals that we wouldn't have seen in the past, being a relatively small firm, East Coast firm. That our volume of opportunities, our pipeline is really high right now, just because there's just a lot of people not deploying capital.
Wow, yeah, and it's so. I mean, Sean, your company's bootstrapped, right? Like I imagine, that this isn't just about whether or not you're able to raise and controlling burn, but also weren't people buying less in the last year? Weren't enterprise kind of pulling back? Like I've heard a lot about not necessarily budgets being slashed, but a lot more due diligence on spending, especially on products.
Absolutely. I mean, certainly what I've seen is this kind of wait and see approach, and I'll pivot and ask Hank about this as well to see what he's seen. But certainly there seems to be this big kind of everyone's not sure what's been going on in 2023, so they're all like, well, we're going to hold back and not spend some money on some things that we used to spend money on, or maybe we have budget that we want to just wait and see, not be the ones that spend this money and see what others do. It's been this very weird year of I'm not sure what's going on. You're not sure what's going on. So let's just hold off on really doing some of the things that even if we've done them before, certainly companies are still buying and getting pen tests. These are often required through regulatory purposes and reasons. For the broader kind of security assessments, things like that, pipeline has been slower. Deals have taken longer. Certainly at Trimark, we have a lot of great customers that continue to reach out and continue to keep our pipeline pretty full. But we have heard from others that are experiencing challenges, especially on the product side. Companies seem to be a little bit more reticent to certainly investing in potentially new products that could help them. But I would like to kick the question over to Hank to see what he's seen from the perspective of the money and what's been done with money from companies into product companies that are looking for those ARRs and things like that to continue. And then I have another question.
Yeah, no, I mean, justifying your existence is becoming a much bigger part of your job. So you have a customer, let's say it's a Fortune 500 CISO. They have 150 security widgets in their portfolio products. And you're one of those. There is a concerted drill going on across enterprise security leadership where they're saying, okay, we have some overlap. We could afford to have overlap in the past. We could afford to have redundancy. Redundancy was good. It's a part of a sort of a defense in depth, but our budgets aren't what they used to be, and we need to go through and evaluate what we have, and if there's redundancy there, dive a little bit deeper and figure out exactly, why we have certain things. That there was a rush to kind of buy everything, especially if you had kind of unlimited budgets in security, just to kind of check all those blocks. But that's changing, and then so that's with existing customers. Let's say you're a new startup trying to get your first few customers. The same thing applies. You're really having to not only prove your value to the enterprise security stack, but also prove that you're going to be around in a few years, because you may have only raised a couple $1 million and people understand the current state of the venture ecosystem.
Okay, and I'll ask my follow-up question. So apparently WeWork is going to be filing for bankruptcy next week, at least that's the rumor. And companies like Uber, Airbnb, and Snap continue to burn cash. Do you think we're seeing the end of this growth above everything else approach, or do you think we're still going to see some of that, or are the revenue numbers and certainly annual recurring revenue numbers going to be more important and something that investors such as yourself will be looking at a little more closely?
I think in certain cases, the growth above anything else part is going to be in AI. You're going to see that for a while. AI is the new place to find those metrics to be the most important. But outside of just a few categories, and I would say in security, revenue is more important than ever. It really is. I mean, just getting to past proof of concept to actually proof of revenue is a real thing. And sticky revenue too, like quality customers that are going to be around, that are, in the form of ARR, but also just logos that prove your value. If you land Apple as a customer, you probably are doing something right, and it probably will apply to other places. And those are the kind of things that I know that we're looking for, and I see other investors doing the same.
Yeah, and I get talking about other investors and how how we're seeing some things change here. I think you're the second investor we've had on in a row that kind of takes a different approach to how you can manage investments and how you deploy capital. When we had Chad Cardenas on, was it last week or week before last week? Basically the model there is, hey, we're looking at doing an investment in this company, who's in? They have this syndicate of investors, and it's almost like more like a Kickstarter than a bunch of LPs, raising a bunch of money from an LPs, having this huge lump of money that you then need to figure out, okay, how are we going to slice this pie, and we got to get this capital deployed within 18 months. So do you think, this past market downturn, especially like we've seen cases with SPACs where the money was just returned, right? Like the SPAC was never deployed. They never did anything with it, because there's a timer on it. Once you hit that timer and you haven't deployed it, it goes back into the fund. Do you think that'll change how VCs are set up? Are we going to see more of these kind of non-traditional approaches to deploying capital and raising it?
Definitely. Yeah, for sure. And I'm very, that sort of old school VC approach, first of all, raising capital, if you're a traditional VC fund, is a lot harder now. So you're going to kind of have to think about the model differently, because you may not be able to, if you don't have a lot of a track record, you may not be able to raise it all. We've always been set up differently, and I think it puts us in a unique position right now. We're essentially a single LP fund. I'm seeing more people talking about using the model that we have, or the syndicate model that you were just talking about. So having this pool of people that you can kind of tap into whenever, and doing sort of a round robin pitch and pulling the capital together just in time, or a model like ours where you have one large investor who has access to a large amount of capital. They do a lot of other things besides VC, but they also have a VC outpost for giving them exposure to early stage tech, and in our case, cybersecurity. And that's the way we're set up. We have a couple of small LPs, but we have one large LP, which is a $20 billion hedge fund. And we're our own entity, but they're a part of our investment committee. So we go to them and we draw down capital, and our cap table kind of changes every time we deploy more capital. And I think you're going to see more of that, especially as there's less money. There's just less money out there now. So you're not going to have as many VCs and these mega funds. And starting a VC firm right now is kind of like next to impossible, unless you're just some amazing entrepreneur that has an amazing track record.
Yeah. And one of the challenges we've seen is, with a big market change like this, are valuations. And we've seen all kinds of creative announcements where nobody wants to announce a down round. So instead of a Series D, it's a venture round, just a generic, no letter attached to it, or it's an extension to the previous round, or we've even seen like an A2, like a B, like you get, it's a second A round or something like that. So, but with the valuations, there's one really notable unicorn in particular that we had talked about on the prep call, where they went from an order of magnitude down in terms of what their valuation was. How is that affecting the market at this point? Because it seemed like for a while, we thought it was going to be a buyer's market, and we were going to see a huge flood of compromised exits. But it seems like not everybody is ready to accept the fact that their valuation is much less than what they were told it was in 2021. How is that kind of impacting the market? I mean, especially since IPO doesn't look like a reasonable exit for most companies, even cybersecurity unicorns at this point. So, acquisition, maybe PE isn't going to be a great exit for most companies, but what options are out there for some of these companies that aren't going to raise more money and need some kind of exit?
I think so. You described, I think, the most likely course of action for most of these companies is going to be not necessarily a down round, but flat rounds with sort of hidden terms behind them that are very investor friendly for companies that are having a hard time raising money. SPACs aren't really an option anymore. There are still a few floating around out there, but the track record is absolutely abysmal for companies that have successfully de-SPACed. Especially look at some of the cybersecurity companies that went via SPAC. And I look, I'm very familiar with that. I had a SPAC. We created a SPAC to roll up with the thesis of rolling up cybersecurity companies with one anchor and then maybe like three supporting cast of characters. I think for a while it was a really good idea until everybody on Earth started a SPAC, and there was just too much money out there, and there was it was a race to the bottom. There was if you wanted to do due diligence on a company, it was viewed as a negative. So we folded our SPAC and gave everybody their money back just because we didn't want to play in that world, and it wasn't going to create the kind of security solution we were hoping to create. And then the third, the acquisition part, I think that a mental debate here as to whether there's going to be more flat VC and down VC rounds than there are going to be acquisitions. I think we've been talking about the acquisition thing for a couple of years, that the M&A market was really going to heat up. I think you're going to see it happen next year. I really do. 2024, you're going to see a lot of that. You're going to see a lot of these sort of zombie cybersecurity companies either acqui-hire or bolt on in some other way. Because honestly, there's still a lot of cool companies out there. They just unfortunately raise too much money at really high valuations.
Yeah, and just for the audience, SPAC, special purpose acquisition company, and Hank, correct me on anything here if I describe this badly, but yeah, the general idea is instead of going through a lengthy IPO process where you have to file an S1, everybody gets to look at your financials, look at your books. It's more of like a blind investment, just based on who that's behind the SPAC, and then when the company goes public, that's when the investors find out what they invested in. So that the SPAC company might be called, Blueberries and Apples or something like that. And then you find out it's I don't know, ZeroFox. I forget the name of the SPAC vehicle that was used to bring, because ZeroFox went public via SPAC. But is that not doing the S1? Is that like the primary attraction of doing that, like fast tracking?
The SPAC, the founder team for SPAC, they raise all the capital, they put the framework in place. It's essentially a shell that a private company reverse merges into. So you're reverse merging it into the SPAC, and then you de-SPAC, and the SPAC, that's when the trading starts. That's when it's listed on the New York Stock Exchange or the NASDAQ. So you can, at the moment that if you're an investor in a SPAC, at the moment that the company picks a company, say ZeroFox is your example, or whatever company, whatever company they pick, the moment that company is chosen, you can actually choose to get out of the investment before it goes public. That's an option to a SPAC. Which is one of the problems with most of these SPACs is people saw the company and they saw the books they saw the financials, and they were like, oh no, I want out. Yeah. So these SPACs were left with almost no money in their blind pool of trust. So let's say you raise $200 million, you're the SPAC founder team, you raise $200 million, and then you name you're taking a company public, and then suddenly all the investors pull out, you have nothing left. And so that causes a lot of problems. There's options at that point, but they're not great.
Yeah, and I saw that happen with a couple cases. I can't remember the name, but at least one security company SPAC, like when they hit that point, everybody pulled out, and the whole thing they pumped the brakes and canceled the whole thing. Yeah,
there was a lot of those. I think we knew it was. We started ours before the mania. We started ours in January of 2020, and that was right before COVID. And we went to RSA, and we just met with 1 million security companies, and COVID was rolling out. And then right after that, everybody started a SPAC. I think I knew it was insane when we were in a meeting against, I think it was Shaquille O'Neal's SPAC or something like that. And I was like, oh, Shaquille O'Neal has a SPAC? We're in big trouble. That's when I knew the gig was up.
That's pretty good. So we've seen that funding is down, and certainly just about any market, there's areas to thrive and do well. You mentioned AI, artificial intelligence, and companies like OpenAI are prime for funding now since it's the next big thing. What else do you feel fits in this balance of hype versus promise? And do segments within cryptocurrency rise this level for you?
So Look, let's see. Hype versus promise. Just AI briefly, I think there's a lot of potential there. We're seeing some really cool security startups, kind of building on AI. And I'm not just talking about existing companies that are sprinkling a little AI fairy dust on them and, calling themselves AI, because you're seeing a lot of that too. And sometimes that's valuable, but we're seeing some really cool AI startups as of late in the security space, in the identity space in particular, which is like where I think there can be some really big leaps, like some wormholes to the future, potentially bypassing a lot of stuff. Cryptocurrency, one of those places where just tons of money poured into it. We dabbled in it briefly during the pandemic, a little bit after. I was into Bitcoin, and we kept our cryptocurrency investment strictly to the Bitcoin Lightning Network, which is a second layer protocol that's a scaling solution for Bitcoin transactions. And we've invested almost exclusively in companies that were building privacy forward solutions on top of that network, like encrypted communications, like a Zoom, a hyper private Zoom and things like that, using the rails of the Lightning Network. But I think the rest of the cryptocurrency ecosystem, I'm glad we didn't dabble in it. These tokens and things like that, they just never really made any sense to me. I maybe I just wasn't smart enough to understand them, but that worked out in the end because the hype is just beyond. I think there's a lot of potential for cryptocurrencies in the world, and I think there's a lot of awesome use cases. I've been to El Salvador a number of times and seen kind of what they're trying to do there. But even there, a country that's supposedly adopted Bitcoin, it's still really hard to use Bitcoin there. I could use it at Papa John's and Starbucks, and like that was about it.
That's pretty good.
I mean, it wasn't designed for that scale, right? It's I remember somebody, and I think they fixed some things with the network, but like the Bitcoin, like the fastest it could go was orders and orders of magnitude off what we currently saw payment networks doing with like Visa and MasterCard and stuff like that.
Yeah. No, with the Lightning Network, as long as, there aren't 2 billion people in the world using it at the same time, at its current level of scaling, it works pretty well. Like, go somewhere and, buy a beer with the Lightning Network and other things, and I've done it. Bought surfing lessons with Bitcoin. Papa John's, by the way, is a really nice restaurant in El Salvador, so it's that's one of the reasons why they've got all the kinks worked out.
It's kind of like Taco Bell in the future, right?
Yes, that's right.
Demolition Man, is that a Demolition Man reference?
That's exactly right.
Yeah, that's right. Yeah. Yep.
Nice.
Same.
I had a quick follow-up for you, Hank, about the AI and the companies that have kind of popped up around it. One thing that was interesting to me this week in the news was around updates to ChatGPT, and more specifically how they've expanded the capabilities of it. And from what I read, it seemed like there were a bunch of startups that had enhanced and kind of were leveraging ChatGPT to do more than what it was doing at the time. And now ChatGPT's recent expansion of capability by OpenAI has basically killed off the value prop of some of these other companies. When you're looking at a company that kind of builds on another technology like that, how much are you looking at could the parent kill off this other thing that's attached to it, so to speak, or do you look for more symbiotic type relationships between these companies?
Yeah, with AI in particular, I guess you got to think about that a lot more now, because it's like this whole other like life form out there that could potentially kill off lots of things. We've got a couple of companies in our portfolio that we very early on were like, oh man, what's going to happen with this? So far, we felt ultimately, after weeks of evaluating it, we felt it was more of a complement than a killer app. But we do have to look at that a lot. There's a lot of companies. Here's an example. A lot of the deep fake detection category. We see a lot of companies that are out there claiming to detect deep fakes and having counter information warfare capabilities. And I think the the InfoWar subcategory of cybersecurity is going to be much more commercially viable than it has been in the past, not just like for the military sector, but for the commercial sector. It's becoming like a need in corporate America. But there are still just, looking at deep fake detection, I like, okay, you built the whole company around this, but I feel like we might be able to just use some other existing AI product line out there that might be free to kind of do the same thing 6 months from now. So, putting our Wayback Machine hat on, but our future forward, Back to the Future hat on every time we look at these things it's a real part of our diligence.
Yeah, it's over the last 6 months, we've probably had 2, maybe 3 dozen AI security companies come across, or at least that I've come across while prepping for the show. And that's I literally just made the to-do list item to list them all out, break them into categories, and because it's just all over the place. Like some of them are focused on making sure the wrong training data doesn't go into your LLM set. Some are actively protecting input and output that goes into AI LLM systems. Some of them are focused on anti-phishing and the deep fakes and stuff like that. There's a ton of different use cases there. And, some of them stronger than others, right? Like literally one of them that I saw is just a plugin or an extension that you put in Chrome, that's reading the text that you submit into just ChatGPT, not Bard and Copilot, just ChatGPT, and making sure you're not putting sensitive company data in there. So it's DLP for your text box on ChatGPT.
Yeah, I think I know what you're talking. I think I know the company you're talking about. Yeah, I've seen that. Very specific.
And obviously that could be expanded to be a bit more broad, but man, that's going to be tricky. Like already AI alignment is really tricky. And determining if something's sensitive or not and somebody's inputting, like you have to know so much about the company. I mean, you basically have to have like LLM level knowledge of what constitutes sensitive for that specific company to know if it's going into ChatGPT or not.
Yep. Yeah, it's not. I feel like maybe at a very high level, there's a lot of things you can quickly run through and say, okay, that's probably, you spend 5 seconds looking at something, you're like, okay, that's probably sensitive. That's probably sensitive. But beyond that, you're going to probably slow down business operations if you start tagging things the wrong way. Sounds really difficult.
Yeah. So Sean noticed that your former Army intel, and Sean, do you want to dive into? We've still got about 7 minutes left. You want to dive into cyber war, stuff like that, before we wrap?
Absolutely. Yeah, for sure. Hank, I saw in your bio that you're former Army military intelligence person, and so I was wondering what your thinking was around where we are in the current state of cyber war in the world. Certainly, we're seeing real wars, certainly in Israel and Ukraine and others, little skirmishes as they pop up. What are your thoughts about the current state of cyber war and what companies are rising to meet that challenge that's interesting to you?
Yeah, I mean, I still see the financial services industry as being on the cutting edge, throwing the most resources at the front lines of security because they have to, and they've had to for a long time, and they're scooping up a lot of the best talent to man those trenches. They're still the ones that are buying redundant tools, so they can have like this defense in depth and redundant tactics that are used in the military, overlapping fields of fire and redundancy and all these terms that are used in the military, like that. Those principles and that tradecraft is happening in the financial services industry still. From what I'm in Washington, and I go to a lot of meetings, and in a lot of ways the security apparatus for our country still looks to financial services a lot of times for what the state of the art is. But there's some great things happening in government too. I'm seeing a lot of promise in organizations and the way they share information across agencies, but still really scary. I mean, we don't know. I mean, if I were to somebody were to ask me do you trust our systems when we need them most? In, let's say, in a shooting war with China, and I think most generals in the Pentagon that know something about this would say, not fully. We don't really know if our systems are going to work when we need them most, because there's been so many footholds gained into our systems, either through intrusions or through supply chain interdictions, where we have hardware in our systems now with software on it that we don't know where it came from, and there's so much of it that we haven't been able to go back and evaluate all of it. And then last but not least, I think the biggest information warfare weapon ever created, TikTok, is now being deployed for the first time ever to shape the narrative around a conflict that could get big really fast. And, so we have 21-year-old Americans forming opinions based on a Chinese-built info sharing tool that's really a weapon. So we're in a really bad place. That's my assessment.
Absolutely, and that's a great point around the marketing around disinformation. I mean, we've been in an information age for years with the internet, and certainly TikTok is an extension of that. And it becomes more difficult with the algorithms that are then pushing information, and it just becomes this echo chamber of the same, right? I can definitely speak to having seen a lot of different organizations and environments from their directory systems that manage and provide authentication and controls for most, or if not all, of the other systems in organizations and companies, including financials, that it's not a good situation. Most organizations have very significant security issues. So I echo the general's concerns about these systems across different areas within government, as well as the private sector.
Yep.
Yep, and it's I mean, we're seeing some pretty scary trends there. We're talking about the Okta support site breach later today, and a support site getting breached. If I just told you that and you didn't know the details of it, wouldn't sound like a big deal. A list of, hey, I'm having this problem with Okta. Until you learn about the fact that people are uploading sessions with authentication tokens in them, and it looks like there were the main targets were other security companies. So right. that starts getting really scary, and clearly, even non-nation state attackers realize the value of attacking things that give them the benefits of scale. Attack one thing, get access to thousands of customers.
Right. Yep.
All right. Any predictions? You already made one, I think, saying we're going to see some zombie customers or companies, security startups in 2024. Any other predictions on what we're going to see? That's market related, startup related in the next year or so.
Zombie companies. I think you're going to see potentially. Here's a prediction. You're going to see the kind of the next generation of what is an endpoint company endpoint security company coming into being, and it's going to be the endpoint security. We saw antivirus companies kind of morph into endpoint security companies being the infantry of cybersecurity, and you're going to start to see the emergence of what's next beyond just what we're calling endpoint security companies now becoming that infantry of the core enterprise security stack.
So I'm not sure what that. Could you clarify a bit for me? I'm not sure I followed that.
Right,
something's going to replace them.
Something's going to replace them. I think you're going to see things starting to replace them. Yes, identity, and identity with supercharged with some AI functionality. And I think that's gonna be where people look to say that's the cornerstone of cybersecurity. That's kind of a bold prediction, but I'm making it nonetheless.
Yeah, it's a good one. That's definitely a good one. Yeah, I've been hearing CISOs and security leaders say, you know what, forget the endpoint. Like if I've done a good job with zero trust, it shouldn't matter. Or at least employee-facing endpoints. Yeah. All right. Well, Hank, thank you very much for joining us at Enterprise Security Weekly today. It's been a great conversation, and we appreciate you coming out and taking the time.
Absolutely. This is a fun conversation. Thanks.
All right. Stay tuned. When we come back, we're going to talk about data chaos with Jackie McGuire from Cribble.